Hello and a very warm welcome. On behalf of the experts at ProTax Accountant, we're going to be tackling a really important topic for so many of us today. Exactly how to declare your overseas income here in the UK.
So, let's get right into it. Are you earning money from outside the UK? Maybe you've got a rental property somewhere sunny, or you're a freelancer with clients overseas. And, be honest, does the thought of a massive, unexpected tax bill from HMRC keep you up at night? If you're nodding along, then you are in exactly the right place.
But before you panic, just take a look at this number, 130 plus. That's roughly how many countries the UK has tax treaties with. And you know what the whole point of these is? To make sure you don't get taxed twice on the same income. So take a deep breath. There's some seriously good news coming your way.
Okay, so here's our game plan for the next few minutes. First, we'll nail down what actually counts as overseas income. Then, we'll dive into how you can avoid those really common double tax traps. We'll also unpack something called the remittance basis, walk through the nuts and bolts of filing your return, and finally, talk about when it might be a good idea to call on the experts.
All right, let's kick things off. First things first, what does HMRC actually consider to be foreign income? Getting this right from the very start is, well, it's the foundation for everything else.
Okay, the main rule is actually pretty straightforward. If you're a UK tax resident, HMRC generally taxes you on what's called the arising basis. Now, that's just a fancy way of saying you have to declare your worldwide income, whether you actually bring the money into the UK or not. The bottom line is, if you live here and you earn it somewhere else, HMRC needs to know about it.
And overseas income isn't just one thing, it's a whole bunch of stuff. We're talking about salaries from a job abroad, rent from a property, dividends from foreign company shares, even some pensions. Think about it. If you're a graphic designer in London and you do a project for a company in New York, that payment you get, yep, that's overseas income.
Now, here's where things can get a little more complex, but also really interesting. The rules are not one size fits all. It all hinges on a crucial distinction HMRC makes between your residency status and your domicile status. And understanding this can literally change everything about how you're taxed. So what's the difference? Well, residence is pretty much what it sounds like. It's about where you physically live and how much time you spend here in the UK. Domicile, on the other hand, is a bit deeper. It's the country you consider your permanent home, the place you have the strongest ties to. For a lot of us, it's simply the country we were born in. And why does this matter so much? Because being a UK resident but not being UK domiciled, well, that opens up a whole different set of rules.
All right, on to Section 2. We know what we need to declare. Now for the really good stuff, how to make sure you don't pay tax on it twice. This is the part that's all about saving you money, so you'll want to pay close attention.
The UK's main tool for this is something called Foreign Tax Credit Relief, or FTCR for short. Honestly, the best way to think about it is like a tax voucher. For any tax you've already paid to another government on your foreign income, you get a credit that you can use to slash your UK tax bill. It's a huge help.
Let's make this super clear with a quick example. Say hello to Anya. She lives in the UK, but she owns a flat in Spain that she rents out, making her £10,000. Now in the UK, her tax on that at the basic rate would be $2,000. But hold on, she's already paid $1,900 in tax to the Spanish government. So thanks to foreign tax credit relief, she just subtracts what she paid in Spain from what she owes in the UK. And what's left? She only has to pay HMRC $100. It's really not so scary when you see it like that.
And Anya's story shows us the single most important rule of the game. The credit you can claim is always the lower of two numbers, the foreign tax you actually paid or the UK tax you owe on that same income. So if Anya had paid, say, £2,100 in Spanish tax, her UK tax bill would drop to zero. But she wouldn't get a £100 refund from HMRC. It can wipe out UK tax, but it can't give you money back.
Okay, remember how we talked about residence versus domicile? This is where it really comes into play. We're about to look at a special option called the remittance basis. Now, this is a special rule, and it's only available to UK residents who are not domiciled in the UK.
So as we said, most of us are on the arising basis. We pay UK tax on everything, everywhere. But if you're non-domiciled, you might be able to choose the remittance basis instead, and this is a potential game changer. It means you only pay UK tax on the foreign income you physically bring into or remit to the UK. Any money you decide to keep offshore, it can stay outside the UK tax net.
But this kind of flexibility often comes with a price tag. That's not all. Here's where a lot of people get caught out.
If you've been living in the UK for a while, choosing the remittance basis means paying an annual charge. For the 2025-26 tax year, if you've been a resident for at least 7 of the last 9 years, that's a $30,000 fee. After 12 years, it jumps to $60,000. And on top of that, you also lose your tax-free personal allowance and your capital gains allowance. So it's a really big decision, and you have to do the math to see if it's worth it for you.
Now let's look at the next step. So, you've got your head around what counts and what reliefs are out there. How do you actually get this all down on paper and send it off to HMRC correctly? Let's talk about the practical side of things.
When you're filing your self-assessment tax return, the absolute key when you have foreign income is this form right here, the SA 106. This is the extra part of your return where you list out all your income from abroad, and just as importantly, it's where you make your official claim for foreign tax credit relief.
And of course, you cannot, I repeat, cannot afford to ignore the deadlines. If you're new to this, you have to register for self-assessment by the 5th of October. If you're a fan of paper forms, your deadline is Halloween, October 31st. But for most of us filing online, the big day is January 31st. Get these in your calendar right now, because missing them means instant penalties.
Okay, here's a great pro tip from the team at Pro Tax Accountant on the most common traps people fall into. Using the wrong exchange rate is a classic. So is completely forgetting to claim the tax relief you're totally entitled to, or not keeping the right records of foreign tax paid. But the number one issue they see? People getting their residency or domicile status wrong from the start, which, trust me, can cause a world of problems.
Right? We have covered a ton of information, and I think it's pretty clear that while the basics might seem simple, the details can get tricky fast. And that brings us perfectly to our last section, how to navigate all this with confidence.
So let me just ask you, after hearing about all these different rules, forms, and potential traps, are you feeling just a little bit overwhelmed? Maybe worried about making a simple mistake that could end up costing you a fortune? If you are, don't worry. That is a totally normal feeling. And that's precisely why getting a professional involved can be the smartest thing you do. An expert doesn't just fill in the forms to keep you compliant. No, they actively work to make sure you're using every single relief and allowance available to you. They save you a ton of time, a whole lot of stress, and they can deal with HMRC for you. It's all about getting that peace of mind.
So, I'll leave you with one final question. Are you ready to make your overseas tax situation simple, straightforward, and completely stress-free?
If that sounds good to you, then the team at Pro Tax Accountant is ready and waiting to help. For expert advice on anything we've talked about today or any other tax questions you have, you can reach them on WhatsApp or give them a call on 07985 689912. Again, that's 07985 689912. You can also drop them an email at info@protaxaccountant.co.uk. And for more great tax tips just like this, make sure you hit subscribe on their YouTube channel. Thanks.